Good afternoon, ladies and gentlemen. Welcome to the Wealth Management in Asia session. My name is Chong Kim. I'm a manager and a member of Financial Service Practice Group at Bain and Company. I will start off today with a brief introduction to why wealth management is an important topic at this moment. Wealth management service is one of the fastest growing markets in Asia. It's not only growing fast, but also changing very rapidly. Particularly in Asia, the size of the asset have been growing faster than any other place in the world. The distribution of wealth has been changed significantly, and also new regulation is expected to launch in the coming years. Under this turbulent environment, today's session would be a great opportunity to find insights how to develop wealth management business in Asia by understanding current situation in Asia as well as the global trend. Today we have three honored speakers who will deliver insights on the topic. First, Mr. Chris Ryan will present Global Trend in Wealth Management. Mr. Ryan is a regional CEO at ING Investment Management Asia Pacific. And Mr. Ryan will be followed by Mr. Johnson Chung. Mr. Chung will give us the overview of Asian wealth management market and business models and opportunities for emerging market under the title of Asia Pacific Wealth Management Market. Mr. Chung is a partner and a head of Asia Pacific Financial Service Practice at Bain and Company. And lastly, Mr. Satoshi Nojiri will deliver Japan Wealth Viewpoint from Baby Boomer Retirement, which I believe will give us a lot of insights as most of the countries are now facing aging problem. Mr. Nojiri is a director at Fiderlity Retirement Institute in Japan.
Well, looking forward at the global wealth management market, I think the important thing is to understand the scale of the wealth management market today, where it's been in the past and where it will be in the future. If we look at this particular chart, you can see that wealth management assets held by individuals has grown very quickly over the last few years, and by 2011 will reach approximately $51.6 trillion US dollars. And it means that, at that rate of growth, and this is an important point, the difference between the wealth management assets today and the wealth management assets in 4 years' time will be larger than all of the assets, the wealth management assets that existed in 1980. Normally now in possession of the full client balance sheet. Many years ago it was difficult to get information from clients about their financial position, but these days it's a more common thing for a wealth advisor to inquire from the client and to receive from the client detailed, comprehensive financial information, which lets them do a better job of planning for that client's wealth creation activities. Products like annuities with an aging population are becoming more popular. In Japan right now, one of the hottest products, single premium variable annuities, the customer base for those single premium variable annuities are the baby boomers. They're typically 50 years plus. In fact, a lot of pre-retirement people from 60 to 65 are very interested in this product as well. And in other markets with aging populations, you'll see the same thing. Clients are interested in global allocation, as we've seen here and here in the last couple of years. Clients are no longer satisfied with just having domestic investments. They want some exposure to foreign investments as well. I was asked in a separate session earlier this morning, when will this stop? When will the frenzy for overseas investments stop? Well, most markets reach an equilibrium point. If you look at more mature markets than those that are just getting into international investments now, that equilibrium point is normally around 25% of total assets, sometimes a little higher. 25 to 30% of total assets is the normal equilibrium point. Consolidated reporting, I will show a little bit about that in a moment. And research is now driving investment insights. It's targeted research at particular issues, and research is now paid for explicitly by the client through a fee. They pay a fee for receiving the advice.
By knowing their existing needs and preferences, as well as how do you retain them, by knowing what are their preference and interests going forward. So looking at things at any one point in time will risk that your organization being less competitive or less relevant in the marketplace, because the needs, as we saw in earlier slides, is changing pretty fast. If we were to look at wealth management demographics just in Asia 5-10 years ago vis-a-vis what we see today, the appetite for risk, the sophistication level of your clients have changed significantly. So what it means is that in a span of 10 years, there is actually a fundamental shift in terms of what your clients expect from you as well as what you need to deliver. So you need to know both what they need now or what they like now as well as actually what they prefer going forward. So this is another example for South Korea. So, but basically telling the same picture of you need to understand the needs of your clients. So as mentioned earlier, I just want to go through that quickly without repeating what Chris has mentioned, but giving some of the additional comments about what are the things that you need to think about in order to be effective and competitive in whichever market that you're going to operate in. The next section I want to share with you more is some of our observations across Asia, in fact across the globe, but I'll focus more in Asia, about institutions, banks, investment companies, insurance companies as well, who are providing wealth management or private banking products and services. What are some of the observations that we think they are doing right versus that they are not doing so right? And hopefully give you some valuable insights and thinking about what are the things that you need to change or do better in order to be truly competitive. In almost every market or any market in Asia, you look at South Korea, Hong Kong, Singapore, China, Taiwan, you're bound to say this. Although this is an example from China, but it's pretty much applicable in any markets that you pick in Asia, is that there will be different types of players. There will be players from the global banks, the likes of ING, operating in your marketplace. There will be the local players, the Shinhan banks, the Kunmin Bank, the likes of the local players. And there will be some very niche player, some of which even the names we may not have heard of if we are not in this market long enough. I've mentioned some names here. Pictet, it's a privately held private bank.
In the mass affluent and upper mass, we have different feature in that allocation. You can see in the red number, so average asset has not been changed for the last 8 or 6 years, but number of households increased about 30%. So very important. It is very important to know about what we're focusing on our attention to the new client rather than existing client, or in addition to the take care of the existing client. So because there is a lot of new money from in, then before going on, I would like to take a moment to explain the baby boomer retirement. We have 7 million baby boomers who were born over just 3 years, from 1947 to 49, just 3 years. From 7 million, 3 million people are working as salaried employees who are retiring within 2 to 3 years with more than 400 billion US dollar as a retirement lump sum money. And average retirement benefits, which is include lump sum as well as pension type of a benefit, is expected to be more than $0.2 million per person, of which more than $0.1 million are expected to come to the baby boomer as a lump sum money. If 20% of this lump sum money goes to investment or mutual fund in Japan, the net inflow will be $83.3 billion, which increase the mutual fund asset by 12%. So let's come back to my original point. So impact of the baby boomer retirement.